Hi, everybody. Hello, Face, Cecilia, Chad, Chris, all you warriors. David, how are you? Eric, Gregory, Guy, Harry, how's it going? Joseph Kang, everyone doing okay? All right. So it's Paul Day. We thought it was yesterday. Hello, Ite. Nice to meet you. So starting off with the dollar, it's really, probably a lot of people are long now. We got through the 720 level and it looks like we're headed higher. I'm still fighting it. I'll get out over this high over 80.
Dale, sorry to interrupt. Morning. I just see the starting banner. I don't see your screen.
Thank you, Stel.
Oh, there you go.
Now you do.
I got
Okay,
it.
it was I appreciate that.
No problem, man.
So, sometimes at 5 a.m., the old rooster doesn't crow like it used to. You know what I mean? So I forget to crow. So here's the crow. It's a chart here. All right. So here's the dollar index daily. So for the dollar to start getting negative, I need it to start closing back under 97.36. It's not that far away. The moving average is here too as well at 97.26. Then I think we could get something going to the downside, but everything's going to be hanging on Powell. One thing that I do think was significant last night, and it really didn't come close to my stop, but EG spiked over the megaphone. Okay, so you could see it better on a 4 hour or even a 1. So it attempted a throw over here off the megaphone line. And unlike a lot of throwovers we've seen lately that were able to sustain itself over the line, all we could get was an intraday spike above it. So this trade still looks alive. I'd certainly like to see a reversal day. We're about unchanged on the day, up a pip and a half or so, but this could be the high, which means if I'm favoring a decline in euro pound, let me put this out to you guys. And I thought the dollar was going to come off, and I'm bearish euro pound. What's my preferred long? Okay, Gavin's got it. Good, Gavin. All right, so long cable, right? So we'll see if that manifests. Something else I'm taking a shot in is crude rally. Last Saturday I didn't think we would get through 58.50. So this move to 940 is actually just a little bit above 78.6 back. So taking a shot here, stops over 59.50. We'll see. Crude's going to have to close back under 57.90 to start getting something going back to the downside. Still think that's a possibility if we could get a negative day, that eventually we're headed towards the 54 level. So if you miss this, and that's why I say it's okay to miss trades. I miss trades every day, and that's okay. Write it down. I miss trades every day in everything, and that's okay because the market is going to give you another opportunity. There's another bus around the corner, and that's why, impulse trading, FOMO, you don't have to do it, okay? Because even if you miss something, and you are going to miss it, so it's aggravating enough trading, isn't it? Where you don't have to, self-flagellate yourself because you miss a trade. Why don't you just own it? I'm going to miss trades every day. And then, you accept it. But there's always another setup. So if you're a bearish crude and you go, oh, God, I missed it, and you're a patient, you almost have the same level to sell it against. I'm not saying it's right, it's wrong, but, if you had FOMO and you started getting short down here, and you weren't protecting yourself, you gave it all back, okay? Or you're underwater. So just write it down. It'll take the pressure off you. I will miss trades every day, and it's okay. There's always another. And this is self-talk too, guys. I would only know about the thoughts that you guys have in your heads if I didn't have them myself, or I hadn't seen it in others. Correct? Okay. So that's WTI. The yen is right up against this, 109 level that a lot of the guys talked about, but it's not giving anything up yet. And actually, I notice what's pretty interesting is with the yen not doing much the last couple of days, look at what yields have done. So this is something that was talked about last week before the employment report, but even the 10-year is actually a little stronger. But look at this. It's trying to get back inside the wedge line. Now, unlike the EG, well, this was a nice 3 driver. This spent a lot of time underneath the wedge line, didn't it? Couple of weeks. And now it's trying to fight itself back in to the wedge. And the breakout to the upside on the wedge, we're going to need 230. So anyway, that's part of the yen equation. If the yen comes off, you would think you'd get some type of pop in metals. I still can't get bearish gold. I still don't believe in this double top here, guys. I don't believe it. And the more time it takes to start getting some acceleration to the downside, I think the less likely it becomes that we get full-blown retests of the breakout before we get a squeeze and a stop hunt above this high from 2 weeks ago at 1439.31. Okay, so that's pretty much my coverage here for today. Any questions on anything I said? Okay, and just for reference, what I need on Euro Pound on a weekly basis to give me a 2-week reversal, we have to close under the close from 2 weeks ago, and that's 89.50. So it's only Wednesday, and 89.50 is doable. Okay, and this still remains my target. So we'll see what the best FX team on the net has to think about what's going on. And what do you think, Blake? You think Jay Powell's going to be dovish or take away the punch bowl a little bit, and then it would have more impact if he eased the end of the month? What do you think?
It's hard to imagine him being dovish. The problem is the market is already
priced it in.
Yeah, well, it's already discounting him being dovish. I mean, that's why stocks are where they're at, and they're expecting more cuts. So,
talking about stocks, Blake, I'm curious. I have like a 29.60 line in the sand in S&Ps that it held yesterday. If I was long S&Ps, I wouldn't want to see it under 29.60. Do you have the same level there in S&Ps?
Yeah, pretty much right here. It's a little head and shoulder pattern. I mean, that's the breakout point. It's, 29.60 is exactly it. And I think, we get below there, it's probably going to shake the trees a little bit. But, where are we going to go?
30.50 per first, probably.
Well, I mean, if we drop in the S&P, where are we going to go? I mean, what are we going to take?
2,900 maybe?
I mean, that's maybe. I mean, that's not. I guess it's. Maybe. Let me see.
It's a tough call. Look, you know how much money I've lost shorting this market over the years?
Yeah, I mean, that's maybe a little 2-3% correction. Yeah, I mean, I think that's possible. It's not. People don't have a place to put their money, and that's the problem. So, any dip in equities, you're going to find buyers because everybody's expecting that some sort of China trade deal is going to get done by the end of the year ahead of the election. So, I think dips are going to be very limited in equities.
That's a great point. Every TINA, right? There is no alternative, and it's becoming more of there is no alternative if the Fed's back on an easing path, right? And you know what the kind of stocks they're buying, Blake? They're
What's
buying
that?
the real heavy spec stocks. I mean, the IPOs are going off well. I don't know, some stock that has the word meat in it, and all these IPO. And yesterday was a classic example for just the general board. The spec stocks, the high beta stocks were strong, and the rest of the market did nothing. NASDAQ was strong, and the rest of the market did nothing. So people feel they have to take even more risk now to get the return, and they're buying things that companies will say, we don't foresee profitability for years, and people are buying them.
Sure, and you know what? I mean, you have to. You got to beat the S&P somehow. You know, right? I
Yeah.
mean, you got to beat it somewhere, and that's the cycle we're in right now, which I don't think is a
Healthy.
It's just it's a train wreck waiting to happen. So, but does that mean that train wreck is happening today? Probably not. And
you're riding the train, and you're in the club car having drinks.
Yeah, exactly. You're just sitting in the club car, taking in the cocktails as we're chugging right along, getting ready to jump out the back whenever need be. But as far as right now goes, equities are strong, and I think any pullback here should be fairly limited. Like we might see something that looks like this, and maybe you get to 2,900, and buyers emerge again, and but I do think that 2,960, as you pointed out, that is a bit of a line in the sand. I think it'll usher in some selling, but nothing too major, at least not at this point in time. I would be a little skeptical, actually, more on a longer term basis. If you look at possible false breakout up here, then maybe we spend a couple weeks underwater in summer, giving back some of these gains. I don't know, but what our focus is today is going to be more on the dollar and what the dollar is doing. The dollar's pushed up against some resistance here, and we are facing the Humphrey Hawkins testimony that's today. The testimony that is testifying on semi-annual monetary policy report ahead of the Financial Services Committee.
Got it. They used to be able to just say Humphrey Hawkins.
What's that?
They used to be able to say it's Humphrey Hawkins.
Yeah, you used to be able to. It's the
2 words.
Yeah, it used to. It used to be the Humphrey Hawkins, but I mean, I still call it that because it's easy to reference. But
right,
that the prepared speech is expected actually in the next 15 minutes, so 17 minutes at half past the hour. So just keep that in mind as Steve and Stelios come on. We should get some those comments, and the dollar may see some movement there. Watch this peso, guys. I don't know if you watched this yesterday, but the finance minister had resigned via Twitter. We got this huge spike up. The replacement seems like a pretty good replacement, and that kept a lid on the peso, but the peso is starting to rally. The U.S. dollar Mexican peso is starting to rally. The peso is coming under pressure. His comments from Obrador, AMLO is coming in, saying that there's maybe some other members that may resign from his administration, and this is just all part of change. But is it change, or is it lack of confidence in his presidency? And I think the dollar Mexican peso is under a little bit of pressure here as a result. I sent out a update yesterday. I'm going to sneeze here in a second. That's why I'm pausing a little bit. My allergies are bothering me a little today. If you got this analysis yesterday, here's your hourly chart. Intraday update: the U.S. dollar Mexican peso rips higher as finance minister quits via Twitter. Bottom line is calling out government, and this could lead to loss on confidence. Dollar Mexican peso probably a buy dips to the 1910 level or so. we went as low following that as 1910 and change, and we are moving higher. So, if you guys are long the US dollar Mexican peso, I think you can move the stops up to break even now. And one thing about the peso is we stopped at the 200-day moving average, 50% retracement. We got a nice little double bottom set up here. So if we extend higher, I mean, that could take us back up towards 1970 ish. If the US dollar Mexican peso really starts to make a move, I would keep a real close eye on this, especially if we get some risk aversion. You might get some emerging market currency weakness. I wouldn't want to be on the short side of the US dollar Mexican peso. Let me just put it that way. At this point, I think the risk is that we're starting to build this momentum here. We might retest these highs with the US dollar Mexican peso. Now, let's go back and talk a little bit about the dollar. So, what do we do here ahead of the Humphrey Hawkins testimony? The market is expecting a dovish Fed, and like I said, the market is already pricing in a dovish Fed, and that's why equities are where they're currently at, and that's why we continue to move higher. Is the Fed going to take away the punch bowl right now, given that economic data has been pretty strong, and with the economic data being as strong as it is it possible that the Fed is not as dovish? That is, and if that is the case, then you can see the dollar index test this resistance level into the 9760, 9770s. Would be an important test and possible break of the dollar index. And if that happens, that could actually spill over into the equity markets and give us some downside pressure in equities. That is also entirely possible. So I think you have to keep an eye on the dollar here in the next 15 minutes. It's going to be pretty important what the dollar does and what the response of equities are as a result. If the Fed continues to stay dovish, the question is the Fed really kind of bowing to Donald Trump, or are there really factors and indicators that the Fed's seeing that warrant a dovish Fed? And that's a big question mark in a lot of people's minds at this point. So let's watch the dollar today. I think the dollar is at pretty important resistance here. Dip back below this 97.20, 97.10 would be pretty bearish for the dollar, but at the same time, a break above 97.70, and you got a dollar that's probably going to test all-time highs, or not all-time highs. I'm talking trend highs or recent highs, or yearly highs. The other thing that's happening today is that is you have the Bank of Canada. Now, watch the dollar Canadian. We've had a hell of a strong move in the Canadian dollar, not just against the US dollar, but the Canadian dollar has been strong against virtually everything. I mean, you got the Canadian yen that's right up against some pretty strong resistance up here. Big trend line here. I should go to a 4-hour chart. You can see the Canadian yen's right up against a very pivotal trend line. You've got the Euro Canadian, which had been beaten down, which has recovered a little bit. I still have some Euro Canadian longs, but and then you have like the Pound Canadian too, which has been extremely beat down. That's just from the pound being hit quite a bit. The New Zealand Canadian, Aussie Canadian are both still trading pretty heavy. The risk is for in my opinion, for the dollar Canadian, is that the Bank of Canada is actually a little bit more hawkish. And if that is the case, the dollar Canadian could continue its slide. What the market's not positioned for right now, is a dovish Bank of Canada. Now, the BOC is expected to keep rates unchanged. So let's just all make sure we understand that. The BOC is expected to keep rates unchanged. But if they start citing, NAFTA is not, still NAFTA or USMCA still hasn't been ratified, or the ongoing trade tensions are now becoming more of a concern it's becoming a concern for the Bank of Canada. If we get some sort of dovish comments like that, I think that could catch the market off guard. And remember, we are from a technical perspective, we have moved quite a bit in not only a dollar Canadian, but like I said, all the other Canadian pairs. What I will be looking for is specifically is if the dollar Canadian breaches 131.50. You can see this arrow here. That I think is very viable. I think if that happens, technically, what I'm saying is viable is a squeeze higher is viable, which is a weak Canadian dollar would come into play. Again, I don't think that for me is not my base case. I mean, I hope it's going to happen because I am long Euro Canadian, so I hope that the Bank of Canada is just dovish. But I'm playing more of the Euro Canadian based on the euro, that I think that gold is still broken out, and I still think that the euro is channeling between this 111.80 to 113.80, somewhere around here. I think that the euro is still bouncing around, so I'm playing this more from a euro perspective. But boy, I'll tell you what, it'll be a little gift if the Bank of Canada is indeed more dovish today. And if that's the case, you got to watch these Canadian pairs. They are at risk of squeezing. If that is the case, like I said, it's not the base case. It's not my base case. I think they're going to probably be somewhat neutral, if not slightly more hawkish. But a dovish BOC, and I'm going to step on the gas a little bit, meaning I'm going to sell some Canadian dollars more against the euro. Probably sell some Canadian dollars against other currencies as well, is what I'm thinking at this point. But it's been a very tough beginning of the week, but don't worry. Today is the day that we've all been waiting for the entire week. We've been really looking forward to the Humphrey Hawkins testimony and the comments that should be out here in the next 7 or 8 minutes. And we are looking forward to the Bank of Canada today. So I'm hoping the volatility is going to make its way into the currency market, because the last 2 days have been extremely dull and very tight ranges in the currency market for the last couple of days, minus the peso, which, by the way, this dollar Mexican peso continues to rip higher. Look at that thing. It's just flying. So I'd like to bring in my colleagues, Steve and Stelios, see if they have any comments. Stelios, good morning. Steve,
good morning. How are you?
Good morning. Good. So how's it going over there?
Very, very warm.
Very hot.
Yeah. 40
What's
degrees,
that?
40 degrees Celsius. So we're boiling.
Oh, you guys are boiling over in Athens. Do you guys even have air conditioning units?
Are you kidding me?
They're working full time.
Oh, yeah.
Oh, okay. All right. At 40 degrees, I mean, that 40 degrees is like for us
100.
100.
Is it 100?
I don't know.
100 plus, I think. It's a little bit.
Yeah, I would say it's probably.
You guys are in Phoenix.
Yeah, I mean, we're around that same temperature as well. It's nasty.
It's 100 it's 104.
Oh God, yeah, that's exactly the.
And humid too.
No, not really. That's a good thing.
Okay.
So, so what do you guys make of? Did you guys see this peso move yesterday? Pretty amazing move, huh?
And Lopez Obrador actually did say just a couple of minutes ago that there may be other members of his administration that will resign, and that's why we got another little leg. I think the main thing is not the fact that he resigned, the finance minister. It's what he said, and he said that there were discrepancies in economic matters. So when you hear that, that's really not good news. And he suggested that the current administration's policy was not based on evidence. And he did say also that it was not free of extremism, whatever that means. But
what does that mean?
Yeah, I've been trying to figure it out.
We're not talking about social policy. What does it mean?
Yeah, but anyway, the bottom line is that, remember, we've been saying from the beginning of Obrador's when he was elected that we thought the main risk, apart from USMCA, whether that's going to pass or not, is this administration for Mexico and the currency. So this leftist president promised a lot of things, and so far he's not really delivering, and he has people from his government, important people like the finance minister, resigning with some scathing comments.
So you're trying to tell me that socialism doesn't work?
Yeah.
Well, Olivier from our community left Mexico because of that. I mean,
yes.
It takes a lot of courage to leave your home country or leave a country because you don't like who was elected.
Yes. That says a lot from a person who used to live there for years, right? So that says a lot.
Yeah.
It's been a hell of a move, and I personally believe that the U.S. dollar Mexican peso is a good long. I was just long just a few minutes ago. I just scaled in and out of it, just taking some money out of it. But personally, I think this is a pair that you probably want to be on the long side, and you couple that with a little bit of risk aversion in the market. People are going to be selling these emerging market currencies anyway because the carry costs, the carry that you benefit from them when you're holding it during a rising equity market environment. You can really get a Mexican peso liquidation going the other direction should stocks become a little vulnerable. So
plus
I strength. Dollar Mexican peso is a great long at this stage.
Plus dollar strength is a double whammy for exotic currencies, because it's not only that, of course, when you're looking at a cross rate that has the dollar, obviously, it benefits directly, but appreciation of the dollar damages the economies of those countries because they have a lot of dollar debt.
Yes.
So it's a double whammy. Yeah.
Well, hey, I'm gonna pass it over to you guys. I got to get to the markets, but I wanted to say, have a great day, everybody. Remember, if you haven't visited Forest Park FX, they're right here, or they're at the top of they're on our ForexAnalytix screen. You can catch it. You can catch it anywhere, pretty much on our website. They are our partners, and they. In this venture for the FACE webinar. So if you enjoy the FACE webinar, make sure you click where it says reimbursement program. You can see how to be part of the ForexAnalytix community, possibly for free with the reimbursement program, depending on how much volume you trade. And if you are in the US and you can't qualify for that, well, at least you can get some cashback rebates, which I think everybody here likes getting cash.
I do like my rebates. Yeah.
Yeah, so that's good. So
they offered to subsidize my subscription. I told them that that's covered.
Yours is comped. All right. Well, all right, guys. Hey, have a great one, and thanks, Dale. Thanks, Stell.
Welcome,
thanks,
buddy.
Steve.
Thank you, Blake.
Steve. If you haven't read this comment, you're gonna absolutely love it. But I was gonna say, following on with what we talked about in Mexico, and excuse my dog, he's sleeping and he's snoring and making noises. But anyway,
Mike.
Mike.
Yeah.
What was I going to say? Oh yeah, you have Obrador, who apparently is one of these presidents or prime ministers or people of who run the country who are not really supposed to be meddling in parts of how the country is running. And a really good example is, I don't know if you heard Erdogan's comments about his dismissal of the central bank chief.
No, I didn't hear all of the comments, but let me just say that I wasn't surprised. I remind you that when they had the first currency crisis a few years back, it was near summer again. I remind you that he insisted that he presided the meeting, the central bank meeting. So,
well, what did he say today? Okay, wait and hear this. He said that the central bank chief was dismissed because he did not conform to instructions on rates.
Okay.
I mean, this is ridiculous, right? It's supposed to be completely independent, and it gets fired because it doesn't do as told. Yeah. And I just see things like this around the world, and
the only good thing with people with that kind of a mentality is that at least they're honest. You know what I mean?
Yeah, okay, yeah, fair enough.
I mean, somebody else would try to say something different. At least, he's saying the obvious. No matter what he said, of course, everybody knows why he.
Okay, any second now we got Powell with comments, so I'm going to be on this. What else is there to talk about? We had a little bit of data this morning. Chinese CPI came in exactly in line, or at least that's what they tell us. And Norway CPI disappointed, went just under the 2% target. It's been, if you look at the long-term chart.
Poor Norwegians. Their cost of living is only going to go up by 2% per year. I mean, this is dramatic. I wish I could help somehow.
Yeah, but anyway, the inflation is at target. It's been oscillating. Last peak was around 3.5%. The one before was 4%. So it goes up, comes down. In line. Hold on,
Powell. Almost be dovish because the dollar's coming off.
Uncertainty since June FOMC continue to dim outlook. So something has changed since the June FOMC, according to Powell.
And we see, by the way, Euro USD at the highs of the day and pressing. Same thing here with the cable. Everything is turning
outperforming.
Everything. Let's have a look at the DXY. Speaking of which, let's have a look at the DXY.
Yeah, it's back under that area.
Yeah, there it is.
Yeah.
He's saying things on, he's dovish, but he's also putting in comments like baseline outlook for economic growth is to remain solid and the labor market is healthy. So
housing manufacturing look to have dipped again in second quarter. He says many June FOMC showcase for somewhat easier policy, whatever the hell that means. Okay, pretty much I think that confirms the 25 basis point.
He says that the weak inflation might be more persistent than anticipated. So
yeah, that's quite
that's
obvious. Yeah, that's quite an obvious comment indeed.
Okay. So, I mean, if any way you see it, employment is doing very well in the UK, the US. That's for sure. Growth was doing well, is now turning, and the leading indicators are not good, and inflation is low. So, to cut is I think it's warranted. The question is what happens after the cut, and we'll know soon.
Speaking of which, Stelio, I know that you love the USD NOK. Look at the area from which we're getting rejected at the moment, right? Look at this. From retesting this long-term channel of resistance. So that's quite an interesting reversal here in the USD NOK.
Yeah, 840 is the target really for now.
If we do close weak on the day, that's going to be a nice evening star formation here, rejected from the 50 daily moving average and the previous channel support acting as resistance. Quite a nice signal here. Let's see what the USD CAD is doing, because the USD CAD, yes, is also turning lower. Keep in mind here, I've said it multiple times, 130, extremely powerful confluence of supports. USD CAD below 130 is going to be very, very, very bearish as an event, unquestionably very, very bearish. But we're not there yet. Okay, now having to do with the cable, another one of your favorites, Stelio, we were saying yesterday that, listen, if you want to be long, there is one thing likely to work in your favor here, and that is the fact that we were retesting this trend line with, if you also draw the upper trend line, you have a wedge here in place. Of course, a single candlestick, even if we close high on the day, is not enough, but definitely, as I was explaining yesterday, from a risk reward perspective, that was an amazing trade with a low probability of working out, but a great, risk reward.
Well, RSI divergent as well. So, you have it marked there.
Yeah, exactly. So let's see if the market is actually going to feel, after Powell is done, that there is enough of a reason to maintain this pressure on the dollar, or if the market is going to decide after the initial reaction, because don't forget that there is also a lot of algos reacting to headlines, that perhaps this is an overreaction, because at the end of the day, don't forget that what did we know until 10 minutes ago? We knew that the market was pricing in almost a 100% probability of a 25% rate cut at the end of July, at July 31st to be exact. And, if the market, more or less settles at the same, then there is nothing to see here. Personally, any repricing that will put on the table a 50% base points cut, I would fade that, because I believe there is almost zero chance. I mean, 0.00001% chance that they will cut anything more than 25.
Yeah, more than 25 basis point moves is in times of crisis, and we're not in crisis.
And not only that, it's going to be very hard for them to. First of all, let's take it oppositely. Let's assume that they cut by 50 basis points. I think that an assumption that would be market positive because, okay, they're more accommodative, is going to be a wrong assumption. I believe that if with indices being at all-time highs and the economic data not having collapsed completely or whatever, I think that the 50% basis points cut that would surprise the market would immediately put the market in emergency mode, because the first thing that the market would try to figure out is what do they know and we don't. Because why are they cutting 50 basis points? I mean, there has to be something a lot worse under the surface, and we just don't see it. You know what I mean? So I don't even think that they would benefit in whatever they want to achieve by cutting 50 basis points. So for all those reasons, I think they're cutting 25. It's extremely hard that they won't cut at all. Not impossible, but in my opinion, a very, very low probability scenario. So I think it's 25 basis points, and wait and see from there what data we get, during the following month. Now, the dollar is still under pressure. As you see, it keeps pushing lower. Euro USD at the highs, quite a nice move so far today. 40. I mean, unfortunately, we've gotten to the point that we see a 40 pip move from a major currency pair, and this is considered to be a move. Back in the day, that was like a boring day. Anyhow, so cable still an inside candle here on the daily, but it looks likely that we're going to have a nice reversal today. So as I said, let's see how the market's going to settle. For the time being, obviously, this a little bit extra dovishness is being conceived as something positive for the stocks. I mean, stocks are positive on the day. S&P is currently 0.2 higher before the market opens. Aussie is responding nicely to the upside. Let's see Kiwi. Kiwi is probably doing the same. Yeah, Kiwi actually quite a nice outside white candle here, quite a nice bullish reversal candle. And let's see if this scenario is going to play out. As we were explaining, there were two scenarios here. One that we would find the bottom quite fast and then post another leg higher, and the other one that we would just keep moving lower. We might get the first scenario, but as I've said multiple times, I want to see 67.10 break to the upside for the Kiwi. And if I remember, the equivalent level for Aussie is 69.30. Sorry, 70.30. Yeah, 70.30 is the equivalent level for the Aussie. So we still have some distance from those. Let me see. Dollar, by the way, I want to see what the DXY is going to do from here. I was monitoring this descending channel here. We broke above it. To be fair, though, we never registered the higher high because this previous high here was at 97.70. Yesterday, we stopped short of that. Today, we're already moving lower with a decent momentum. This is actually bearish engulfing on the daily if we close, as you can see it here, if we close below like 97.37 or whatever. So I want to see if the DXY is going to respond from here, perhaps retesting the channel. If it doesn't, we should still keep looking lower because in essence, we will have printed here a lower low. But it's a little bit too early. Let's give it a few more hours to see how the market is going to close. So I think this is the majority of the majors. So now I can go over questions. Mexico's president Obrador says there may be other members. Oh yeah, Nidis wrote that. Thank you, mate. Gold. Let's have a look at what gold is doing. Obviously, the metals are responding positively, and unsurprisingly, gold is responding positively. But most importantly, it more or less confirms that these triangles support, because initially it was an assumption that might be a triangle, but the more points that we get on the chart, the higher the probability that this is indeed the correct technical formation that we are looking at. And also keep in mind, as you see, that's why I went back to the 4-hour chart, that besides the triangle that I have marked on the daily, this market also held the previous channel's resistance if you extended as support, and most importantly held the previous low here at 1381, 1382. As long as we remain above that level, we have absolutely no reason to be negative gold. As you see, that is why I drew these two lines here, showing that this was a key juncture for the market, because a break below the previous low would extend lower, while holding that support would point to another move towards the highs, towards 1437 again, which likely is the case. And don't forget that silver at the same time is in a descending channel, looks like a flag. I know that it's now too long to be a flag having to do with a basic definition, because there is a ratio, an acceptable ratio between the mast of the flag and the flag's length. But irrespective of that, if it's if it officially can be considered a bull flag or not, I can tell you one thing for sure, that this move lower has corrective characteristics, and we're about to retest this channel's resistance. And it looks very, very likely that we can break the upside, in which case I would be looking for an extension higher, which anyhow was the main case scenario, since we kept holding this. And as I said, price action was unfolding in a quite clear to read corrective fashion. As we see, we also have a very nice reaction higher in the bonds following that move. There is no surprise there either. I was looking for lower prices here, but today's statements, I was actually targeting this low here. We had quite a negative day yesterday, but now we're rebounding higher from here. Let's see how this is going to unfold. We're, by the way, retesting here in the Treasury's previous support resistance area, this time as resistance. So let's see how that's going to play out. Now, it seems to me, and that's another thing I wanted to show. Oh, by the way, Aussie yen and Kiwi yen. If you remember, I said yesterday that among the Aussie USD, Aussie yen, Kiwi USD, and Kiwi yen pairs, Kiwi yen from a technical perspective looked quite nice for a continuation higher, because we had this little pennant. As we speak, we seem to be breaking above it. So that's a nice move that is about to play out here. And Aussie yen stuck still in a consolidation, might even be like a triangle. You can see it here. Okay. So this one hasn't made the move yet. Kiwi is the one that has been moving. But let's have a look at the crosses as well, because let's begin by Euro Kiwi. Euro Kiwi, I was monitoring this rebound because it was nicely channeled. This was a beautiful spike that we had because it retested the confluence of this ascending channel with a 50% fib of the move lower. And as you see, the candle that we currently have on the 4-hour chart is quite bearish. The rebound higher was corrective in form. I mean, whenever you see something channeling that nicely, usually a corrective move. And we seem to be breaking down. So I do think that Euro Kiwi looks very, very decent for a continuation lower after this rebound. Let's also have a look at what's happening with Euro Aussie. Euro Aussie, a stronger rebound than I initially expected, but still looks to be reversing from previous congestion area and the 50% fib. So both of them actually, Euro Aussie, Euro Kiwi, retraced 50%. So, this might have found a high as well. And let's have a look at Pound Aussie and Pound Kiwi on the 4-hour chart as well. Look at Pound Aussie, exactly the same picture that we were seeing in on the Euro Kiwi. I mean, a rebound that was nicely channeled. We seem to be getting rejected from here. We still haven't broken below the channel's support as we did in Euro Kiwi, but it looks like a likely scenario because this rebound higher definitely has so far corrective characteristics. And here is pound kiwi, one of the weakest. If you want, you can draw it like this. Okay, so you can see the implications, right? Bearish as well for a continuation lower from there. So I think quite a nice opportunity in all those pairs. I'm probably going to take some action after the webinar is over. Those of you that are part of ForexAnalytix, you'll know about it as I'm executing it. So that's it having to do with those. Hamid, yeah, is mentioning gold. We just had a look at it. Let me also that. With the left shoulder being the mid-June highs. Joe says, Joe, what pair were you referring to, or were you referring to the S&P while Blake was showing it? Personally, if you were referring to the S&P, I have to say that personally, the reason I had a target at 2960 having to do with my short position, and I was very, very lucky because literally, I got triggered like at the bottom. I mean, my target was triggered was the low. I mean, I think we went just like 0.2 lower or something like that. Was because this was the previous high up there, high here, low there. So as you see, I mean, against 2958, 2960, this little area, I would be very, very, very careful being short. Very, very careful. Now, we break below there. Yeah, I'm with you. We can extend lower, likely towards 2890, 2910, roughly there. But as long as we remain above it, I think that the path of least resistance remains higher. Okay. And I'm not going to go over the rest of the US indices because more or less what applies here applies to the rest as well. I mean, it's not that the S&P is going to be pushing to all-time highs and the Nasdaq is going to be plunging lower. We can see small divergences, overperformance, underperformance between them, but never something drastic like complete deviation. Whenever we see deviations, it can only usually be, and not for a long period of time, between the Russell, because Russell has quite different characteristics. I mean, it's lower capitalization stocks, and most importantly, more sensitive to US economy companies than, for example, the more extrovert like S&P, Nasdaq, etc. So, if you're looking for divergences, I think between US stock indices, I think it's only worth doing so between the Russell and one of the other main indices like the S&P or the Nasdaq. Personally, I don't like the Dow so much. I almost never trade it. I will always choose the S&P or the Nasdaq. The Dow is anyhow very, very highly correlated with the S&P, so no real reason. By the way, dollar still pushing lows of the day, so quite a big reversal here. Cable is threatening with a tweezer bottom there on the daily. I mean, we're already higher than yesterday's open. So it looks like a very nice reaction. Let's see if we're going to get another leg lower for the DXY from here. If you remember at the start of the week, I said that this week should be the week that gives us more evidence about what we should be doing, having to do with the dollar, and likely today might be the day that's going to give us direction for the next move of the dollar, which if this continues until the end of the day, looks like it might be lower. Yeah, as I said, that's going to be a lower low if we actually start pushing lower from here. So, quite an interesting move. Okay, let me see. Do we have any more questions? Coach, do we have an interview today?
Yes, we do actually. Yeah.
We have a question.
Maybe he stepped off for a minute.
We have a question about the DAX. Thank you, Stelio. Thank you. Okay, DAX. You want to look at the positive for the DAX. it's holding this horizontal support resistance area at 12,400. So, that's a positive. On the other hand, if you look at it on the 4-hour chart, you'll notice that we did break down from this ascending channel. So I'm a little bit skeptical of buying it here. I would want to see a move up in the channel once again to then consider that this was a false breakdown. Okay. Until that happens, I would definitely not rule out another push lower before we continue higher. Okay. So I'm a little bit skeptical here with the DAX being long at the moment. Okay. For that reason and that reason alone.
And Steve, I'm sorry to interrupt you. Good afternoon, everyone. Andre, you here.
Yeah, I know your voice.
Yeah, just for those who don't, because we are mentioning DAX. DAX is actually at this point printing a technical double bottom.
Why don't you just take the screen and show us?
I can, of course.
I anyhow covered a lot of markets already quite fast.
Let
why don't
me
you
try.
show us
That wasn't the objective, but I can just push that chart in order to get a clear picture there.
We can see it.
Okay, there's a technical double bottom here. We can see not yet.
I mean, it will be
not yet, but we need to wipe out these weekly resistance, at least these previous highs. That will force the price to enter this broken structure again, and will increase the probability to trade even higher. Note that we are now also trading very close to the golden fib and the second target for this crab pattern printed at 161.8 extension. So I do expect a small bounce. Actually, the market is already bouncing from here, or at least feeling some pressure there. We need, as you said before, we need a clear. We need DAX to be positioned here clearly. So we need a kind of a consolidation above this weekly fractal. But for those who are already involved on DAX, I will, if I were positioned on DAX at this point on a bullish side, I will hold this trade, because eventually that technical double bottom may trigger some more upside momentum. Note that we are also abandoning oversold conditions, which increases also a little bit that possibility.
By the way, Andre, something I forgot to show, and perhaps you can show it to us, and can also get your point of view through that, is that the USD yen, after this move in the dollar we're seeing today, is also getting rejected from an area that we had indicated in advance that is key, which is the 109 resistance area. So that is also a very important development here in the market. I'm monitoring an ascending channel within which it has been rebounding, and if we do clear 108.20, 108.20, 108.30 to to the downside, that is going to indicate, in my opinion, that there is more downside coming. Yeah, but what is your point of view?
Well, my point of view is based on the structure and obviously the patterns that the market is printing. So I shared this eventual right shoulder there, so the market has bounced exactly where I was expecting, and the market is now breaking above this. If we close, I like, one of the reasons why I really enjoy Polish charts is because he uses the close prices and the body candles of the price action, and it's not usual to see traders using those body candles. It's nothing more than a line chart. If you put a line chart, if you use the body candles, it's exactly the same. But and because a candlestick is nothing more than a way to look to the market. So, but there's a line that makes reference to a specific price, and we see this kind of. Actually, I need to go into a daily time frame for a clear picture of that line, of that structure. So we can see dollar versus yen, trying to recover above this previous descending structure. So I believe these inverted edge and shoulders, with the default projection above the 200% extension, it may work or not. But as you said, if the price decides to go back again below this daily fractal, it will increase the probability. We have a 1, 2, 3 wave swing, 3 waves corrective structure eventually, and then a new.
What is your outlook for the DXY?
Well, DXY is one of my favorites recently, because actually I'm nailing DXY without trading it. So, which is no, I don't trade DXY, but I obviously we trade other currencies. I don't trade DXY specifically, because actually my broker only allows me to trade the futures of DXY, so I don't trade the futures.
Okay, I don't.
But.
Oh, so you were looking that as an ascending wedge up there, eh?
Ascending wedge, and I believe the 38% retracement here from all this swing will be the target. So this is the daily for the previous daily fractal. That fractal will be adjusted at the end of this session. Will be adjusted at those highs at the most recent daily, at the most recent fractal resistance. We have already retraced to this previous structure, descending trend line as resistance. If the market recovers this trend line, if the market consolidates below that trend line, it will increase the probability to keep trading even lower. So for those who are subscribing for ForexAnalytix, you have my view on a weekly time frame for DXY. If you want to join us to check our ideas on a higher time frame, please do. And yeah, this is one of the reasons why I engaged my QE recent 2618 trade setup. So this is a simple chart that I can share with our community here. Double bottom, broken neck, resistance above the broken neck.
For a move for another.
I'm looking for a new high, but there are a few steps that we need to consider, a few price levels that you need to consider. So first of all, a bounce from the golden fib. This is also the 200% extension from this double bottom. Double top here. There's a technical double top in the middle of nowhere. So this is the 50% Fibonacci retracement from all this swing low. There's a technical double top there, broken neck, and 200% extension at the 200 moving average. So there's the golden Fibonacci retracement. So I have the 2618 bullish setup there, preceded by a double bottom. So actually this pattern only is formed actually after the double bottom. So how to validate a double bottom with a broken neck? So after a broken neck, we validate that pattern. Then the market needs to find resistance.
That perfect ABCD, that the first target that you have there.
This is a symmetrical projection.
That ABCD you're looking for also coincides just a little bit higher. We also have the 78.6. We also have a horizontal support resistance area. So the area between
78.6. I have a cluster zone between an internal extension and the external extension. So external extension, the default extensions 127, 141, the first swing high, then the retracement, the pullback to the golden fib, and I will measure an internal extension. And I will search for confluence between 150, 161, and I will draw a confluence cluster zone between those Fibonacci levels and the structure. So we have also previous structure kind of lows there and previous structure highs approaching above. So I will not be surprised to see that zone putting some pressure. before the price reaches that level, that price zone, I will pay attention. I have those small flags there, and because we have a technical double top there, nothing assures that the market will not form another 2618 there, and that may also put Kiwi trading into new lows eventually for a small period of time.
Yeah, might be, but
it's not the most well. That's not why I engaged the bullish setup. Well, I engaged this setup in order to try to take my profits above. But pay attention to the golden fib above previous structure support. It will act as a pressure zone for sure. Even if for a small period of time, I believe the market can ignore completely this level and trade higher. The previous structure highs, so I will use the 50% retracement as the previous level the price has respected, and above those levels I have the 127 extension from this first swing. So this is the first extension level above this point B or eventual point B that I will pay attention. So, and then if the market, then we need to get a closer look and a deeper look into price action and try to identify what type of structure the price is building there. But I can let's say
Paul remains concerned about the longer term effects of high and rising federal debt.
Yeah, I saw that.
So he's concerned about increasing debt, he's lowering rates to make it easier to get indebted more. I mean, I love it. It's the definition of paranoia, honestly.
Of course.
Yeah, it's insane. It's the definition of insanity, really.
Well, you know, lower rates, Steve, though, do make it easier and cheaper to service the debt.
You mean they make it
ever-expanding debt?
Yeah, exactly. But, you know, coach, it's like trying to fight cancer with aspirins.
Yeah.
You know,
well, I tried everything.
I bet aspirins didn't work
for sure.
It might have. I think just you know, who knows? I tried everything. Anyway, it worked. So Raksha's here, guys. If
perfect.
Okay.
Andre's through.
Perfect.
Yeah, Andre can join us another day of the week to show us.
Sure. No, I just want to interrupt because someone asked for DAX and then well.
Oh, okay.
All
right. Thank you, Andre.
Thank you very much. Have a nice trading day and trading week. Thank you.
You too, Steve.
Is your guest here?
Yeah.
Okay, perfect.
Okay, Steve. So thank you, buddy.
My pleasure.
Raksha has made some great calls when she's been here. So Raksha, I just promoted you to panelist, so let me unmute you. And then if you just hover your mouse underneath, you'll see a screen share where you could put up your screen. And we can get underway, and I'm very interested in seeing what's on your radar. Welcome back to Face, Raksha.
Hey, hi, Dale. How are you?
Good. Good to have you back. Can you give me a little more volume, please, my trading warrior sister?
Just a second. I'm actually adjusting my screen here.
Okay.
Now we're going to hear you well.
Yes.
Is it audible now?
Yes.
It is great. Now, in order for you to share the screen, you just have to mouse over at the bottom of the screen. You get like a pop-up bar, and there is a share button. There is a green button saying share, and if you click on it, it's going to ask you if you want to take the screen from Andre. You say yes, and then you choose the screen you want to share, and that's it.
You see,
I think I'm done here.
Yeah. Perfect.
All right. How are you, Raksha?
I am very good. How are you, Dale?
Good. I want to thank you for all your support on Twitter, etc. And what a great thing to start with what Paul's saying. So, okay, this has been frustrating. The Dixie's been frustrating to both bulls and bears alike. Could this be the last gasp rally? What are you seeing here, Raksha?
Dixie actually has been very interesting for me since last 2-3 months, actually. Okay. What exactly, I'll just show you the earlier one, which we actually have traded based on this crude gold and silver and all these we have traded, and it was very fantastic. Here was that harmonic completion here in the price reversal zone. From this to this, there was a rally. Then again, it fall back to this level of 95.74, which was a very major support. And from it, a beautiful bounce back to our immediate resistance. And now see it's falling back. Maybe the global unrest which is going on right now, US having conflict tensions with China, and here also with India and Iran. And so all these factors, I think it's pushing down DXY back again to downside levels, I guess. So what I am expecting,
okay, yeah, go ahead.
Yeah, what I'm expecting is near about this level of where 200 moving average is also confluencing. It's near about 96.68.
Okay.
This point, this would be my first point where I think it will find some support.
Okay. Do you have a more intermediate objective, or I understand that trading is do the right thing today and tomorrow takes care of itself, but every once in a while I break out a telescope to give me a longer term bias. I agree with you at that support level. If we take that out, do you have any targets to the downside if that moving average fades?
Downside target will be back of this price reversals range, which ranges between 97.18 to 97.09. This will be my first target for sure,
right?
Because it's also the fib ratio, which earlier given a very good rejection, just pinpoint rejection here. So this will be my first target, and second target will be 95.84. This point.
Okay.
Yes.
Okay, so still pretty range bound. I mean, if you just go sideways, we're range bound in a 200-300 point range in the Dixie. That's for a long time, right?
Yes,
time.
Yes, of course, it will be.
So a resolution of this could be big.
Yes, of course, but let's see how does the testimony goes, and according to that only we can actually predict anything.
Right. Okay.
Let's see what does he have to say for us, because there is a lot of unrest in Nifty also. The budget, the election, the trade war, everything is going on. So as per Indian index, which I'll jump right now, see the Indian index.
Yes.
A huge fall since 5th of July, the day when budget was actually announced here. A lot of people were happy. Many of them were not, because there were so many changes, extra surcharges, and people were not happy. Especially the economists and all these people were not happy. So see the range of the fall it has given us.
It gapped.
Yes, it gapped.
And it's filling the gap underneath it.
Exactly, the day of the budget, it start falling, and then the next day with the gap, it again fall back. Now since last 2 days, it's been stable, but I'm still thinking that it's going to fall a little bit more and find a support near about this range.
Okay.
Just a second, I'll just jump onto the smaller time frame, so it will be easier for you.
Definitely looks worse than American markets.
A lot worse. Let's see.
Do you follow many bourses, Raksha? I know this is your home country, and I think you even have a company named Nifty Analysis. Probably
yes, Nifty Analysis. We have recently started a financial blog. Our company name is Waver. The Nifty Analysis is a financial blog for this. I'll just give a glimpse of it, where we post intraday calls and market watches, and like here it's the silver updates, gold updates, and different types of stocks and indices, both in Indian market and forex, both of that. You can have a look. It's a whole lot of thing here.
So it's the website is niftyanalysis.in.
Niftyanalysis.in, yes.
Instead of com, guys. So obviously you have someone in India as your server or something like that, or host, or something IN. So as we look at crude exploding right now.
Crude is going very interesting, Vidal, right now. See the crude, how is it going? It's my target here. We are already long in crude since this rejection of the 2006 low of 56. My target here is near about 59.981. So as of now. And very interesting pattern is going on right now. As you know, I'm a very big fan of pattern. A very interesting pattern is going on here.
Okay, you have a harmonic here.
Yes, harmonic. So according to that, if these levels are here, these levels goes without any doubt, then I am looking for a price reversal here about at 72. It's a very big, a very long term target, but still I think so. It will be going till 72, 73 zone.
That's a very interesting and contrarian call, considering what's happened over the last few months.
Yes, exactly.
So,
exactly.
Okay. And
because the thing was earlier, I'm sorry, the thing was earlier I was, when this, just a second, I'll just reset this. It's going distorted. Yeah. This was my first harmonic move, which you can see here, which shows that it'll go till 72, 73 zone. When it started falling below my point, then there is one more harmonic move was under formation, which showed that this will fall till 35 zone.
Okay.
But now as it bounced back from 2007 low near about $50, now I have another harmonic move which I can see right now, which is going, and it is still going, it's forming there. So you can see the price bounce from this level. So accordingly, I'm bullish on crude.
Okay. All right. So gold has really had quite a lot of attention paid to it.
Yes.
A lot of people looking at that major breakout, Raksha, that we had out of about a 3-year formation. Looks like you had it 1375 to 66 was your zone. A lot of people thinking that's a double top up there, and I don't buy it. I think
no, that's a catch. That's a catch, actually.
Okay, so tell us what you see.
Again, there was a harmonic move here. I'll show you, which actually showed from this level, to this,
yes,
and then again this. Okay, so this was a harmonic move. Accordingly, what should have been was a rejection here, and it gave a good rejection here. No doubt, it gave a good rejection. But if it has to cross this bearish invalidation, this level, sorry, bullish invalidation, I just mistyped it. It has to cross this range to be bearish on this on gold right now. But it clearly rejected before that, way before that, 1384, near about 1384, it gave the rejection. It's going a sideways. It's still finding some kind of support and some kind of rejection from these points. Last 2 weeks, I guess it's going like this only.
Okay.
So right now I'm not in any kind of trade right now in this gold, because I'm just finding which direction it has to go. Because if it is going above this, then I'll be bullish. I won't be bullish until unless it crosses 1431, and I won't be selling unless it crosses 1375. So this is I will be scalping in between that, but not any long-term trade on gold right now.
I actually think it's more bullish that we haven't had a retest of the breakout. Because people that have not did not get long prior or on the day of the breakout are saying, well, I'll just wait for a retest of the breakout, and the market's not accommodating them.
Exactly. So what I here you can see the highest value, which I think right now for the trading point of view, my target will be 1460. So I'm still waiting for some kind of good breakout here to go for this target 1460.
Okay.
And as per this price action which is going on right now, I don't think so bulls are still ready to just take just leave their control and get the market down back to these levels, 1329 and 1375. I don't think so they're ready for this right now.
Maybe later after new highs.
Yes, let's see. That's what we are saying. Everything on what Powell has also to say, because depending on that, how dollar is reacting, accordingly this will be.
Okay. Any view on the American markets? S&P or anything? U.S. markets? Or interest rates? How about interest rates?
Actually, last 1 to 2 months, it was all Indian market completely. I was just following DXY, and yeah, Euro USD I traded. It was a very beautiful trade. Euro USD, the harmonic pattern, the same as you can see here. I'll just show you.
Okay.
This was the only pair which I actually traded. This was the move, and from here I was short and gave exactly to the target. So this was the only pair I was actually in that. Nothing else in US market so far.
Okay, how about US dollar yen, Raksha? You know, that's a very important correlation, carry trade type of currency. And we just rallied back to major resistance at 109. I'm wondering what your view is on US dollar yen.
Dollar yen.
Not much. It doesn't look like you did a lot of work.
No, I didn't. I told you. I just Euro USD was the only thing. But yes, I am following this. I didn't get any good opportunities as of now in USD JPY. Let's see. I will be doing all this once all the unrest thing in this the conflict things are going on a little bit on easier side. Right now, I'm completely on commodities and Indian market, and only few of the pairs here. That's it.
Okay. All right. So pretty much we covered what you wanted to discuss with me and us today, right?
Yeah. One more there is silver.
Okay.
Silver is rallying.
Yeah, it looks like the gold-silver ratio might be turning, which would favor silver. The last few days, silver's been acting better than gold.
Yeah, actually, silver, as per my view, the silver is going to be the next alternative commodity, alternative way of investment, I guess, because the way it is picking up and the way it has been acting to the levels and all, I think it's going to go very good. So, one of my investment plan right now is in silver.
Okay.
So
all right. And
it is going good.
Yeah, you have those are your targets if we break out 1620.
Yes, I am long from the immediate resistance here, 15.11903 exactly. I am bullish on this, and this will be my first target also, which confluences with the slope here. So this is my first target. Right now, I'll just wait till the point of immediate resistance here. Afterwards, if this goes in R2, and then that will be the ultimate target, like $16. That will be the ultimate target of silver.
Okay. Now, throughout your commentary today, and this is not a market question, it's a psychology question. So I hear you saying, I will wait, and it has to do this. And in the meantime, I'm waiting. What kind of self-talk do you give yourself while you're waiting? Because a lot of people start feeling anxious doing nothing and waiting for the market to tell them to do something. What do you say to yourself?
I find good opportunities in scalping between the resistance and support range in that first thing to keep my itch of trading. Just to do that.
All right. What time frame do you scalp around on, Raksha?
It will be highest will be 1 hour to 4 hours. 4 hours in forex market, and in Indian market I'll go as high as 1 hour.
Okay, you ever go lower, like 15-minute charts or anything?
Yeah, 15 minutes. It ranges from 15 minutes to 1 hour, and for forex from 1 hour, 30 minutes to 4 hours.
Okay.
Yeah.
Raksha, I really respect your work and
Thank you so much.
appreciate you on Twitter and sharing your ideas. And you prove that it's not always the most famous traders out there that are the best traders, because they might be better marketers, but people that do not have 100,000 followers are better market tacticians. So I count you as one, my trading warrior sister. If you want to show your website again and how people could connect with you, why don't we do that now?
Yeah, this is our website, niftyanalysis.in. Here you'll find a range of blogs, a range of articles, not only in Indian market, but also in Forex pairs and DXY. And I'll next, in just coming days, I'll just try to incorporate S&P and everything in this website for sure. And for educational also, you'll get articles on educational topics also, like head and shoulder patterns, harmonic patterns, and all these kinds of things. You will learn from the kind of blogs which we are having right now. It's just not numbers, just not digits. You will learn where is it going, how is it going, and why is it going. That is the thing. That is the main purpose of this blog, to educate you regarding your point of interest, and which indices or in which stock you are interested in.
Okay, there's Raksha Soni paying it forward. This is free, right?
Yeah, of course it is. It's absolutely free.
And you do have a business model? You manage money, or what's your business model besides trading your own account?
We do have accounts for other people. We manage their portfolios also.
Okay.
And we have a community in which we share our ideas, where other traders who are not like the naive ones, or not the beginners, the good expert traders, they also share their views, and we give them where to buy, where to sell, these kind of ideas to them.
Okay.
So in that way also, it's not just for the investors, or it's just not for the beginners. It's for also, it's a kind of a trading community which we run on Slack also. So in that there are other people who trade by themselves. They also have some get some ideas on what to do, what to buy, and what not to do.
Okay.
During the market ups and downs.
Well, you know what I think about having a community. I think it's indispensable. Especially,
exactly.
you know, we only have two eyes, right? Even if they're educated eyes, there are only two of them. So thank you so much for stepping up and being with us today.
Thank you so much.
And appreciate you and your work, and glad to call you my trading warrior sister, Raksha. Good hunting.
Yes, same for you, Dale. Lots of respects and lots of love for you.
Oh, I love you too, Raksha. Thank you very much for being here with us today. Everyone, thank Raksha Soni. Follow her. You want to give your Twitter handle out, Raksha?
Yeah, of course. A Twitter handle for our blog would be @nifty_analysis. My personal Twitter handle will be @rakz_27.
Okay. Thank you so much, Raksha.
Thank you so much, Dale.
All right.
Great day.
Oh, you too. And that's a wrap, Face. Remember, don't just count your pips, count your blessings. See everyone for investing.com Thursday tomorrow. Adios. Thank you, Raksha.
Thanks.